Namaste, welcome to Arthaniti. International in flavor this season. Why? Because it basically provides you diversification. It allows you to invest in companies which are disrupting the technology used in the market. The economies of scale at which they operate is also one of the things that attracts people to invest in them. But investing in individual companies will need a lot of money and a lot of risk, right? So, what is the way out? Well, today I want to talk about a new way, a new fund offer brought in by Invesco Mutual Fund, which will help you invest in international securities. Invesco Mutual Funds in India have come out with a new fund offer which has a huge long name. The name goes Invesco Nasdaq 100 EQQQ UCITS ETF fund of. Now, half of you will stay away from such a fund because the name is never ending and you don't know what each word in that name means, right? But I'll help you understand. Invesco, as we all know, is a mutual fund name. The second term, Nasdaq 100, is a index of 100 non-financial companies trading on the New York Stock Exchange. Now, these comprise of companies like Apple, Microsoft, Tesla, Amazon, to name a few. The next term in the name is EQQQ. Now, basically, to understand EQQQ, we first need to know that Invesco has a US-based fund by the name Invesco Nasdaq 100 QQQ ETF. Now, this is one of the largest ETFs in the world. It has a sister fund which is registered in Europe, and that fund, it goes by the name Invesco Nasdaq 100 EQQQ ETF. So EQQQ basically stands for European QQQ. QQQ is the ticker name for Invesco ETF registered on the New York Stock Exchange, correct? So we have finished with the three first words, Invesco, Nasdaq 100, EQQQ. Next acronym in the name of the fund goes by UCITS. What does this stand for? Now, I will have to read it out because I don't want to say something wrong. The UCITS in the fund stands for Undertakings of Collective Investment in Transferable Securities. What does this mean? It is basically a regulatory framework for funds registered in the European Union, and they have to follow that regulatory framework, and investments from all over the world can come into that fund which is registered in the EU, correct? So this mutual fund is basically a EU registered ETF. Now, ETF, exchange traded fund, and the last fund of fund. So basically this NFO that is floated in India is going to be a fund which is going to invest in this Europe registered Invesco Nasdaq 100 EQQQ ETF, correct? Understood? So what we are going to be available for us for investing is this underlying fund, which is a sister fund of the New York Stock Exchange registered Invesco Nasdaq 100 QQQ ETF. Do you understand? Understand the difference, right? Invesco Nasdaq 100 QQQ ETF, US based fund, largest in the world. Invesco Nasdaq 100 EQQQ UCITS ETF, a Europe registered sister fund, correct? And what we are going to get is a fund of funds. So basically a fund floated in India who is going to invest the money in this Europe registered fund. So after simplifying the huge name and what it stands for, I'll give you some pointers, some important points, 5 of them, which you should know if you are planning to invest or thinking of investing in international markets. Now, basically, this fund, as I told you, is a fund of fund. So the fund which is going to be floated in India is going to invest in the European registered ETF Invesco Nasdaq EQQQ ETF, right? So that is going to be the underlying fund where this fund of fund is going to invest, correct? Now, that European registered fund basically invests in the Nasdaq 100 index. Now, what is that index? That index is the average of 100 biggest technology oriented non-financial companies which are registered on the New York Stock Exchange. Now these companies are companies with the highest market capitalization, correct? The Europe registered ETF has highest portfolio allocation to Apple and Microsoft, which together form around 22% of the total portfolio of this ETF. Other companies in the portfolio are basically the likes of Alphabet, which is Google, or Metaverse, Tesla, Amazon, Cisco Systems. So you can understand by the name of the companies, the sheer size of their operations. And if you are interested in technology companies and are of the view that these companies and the scale, economies of scale that they operate in, the research and development and innovation, the disruptive technologies that they come out with are going to help you gain long-term good returns in the long term, you should definitely think of investing in this fund. Now, investing in these foreign US based tech companies individually will cost you a lot of money. Also, there is a lot of risk involved if you invest in just one stock. So instead of that, investing in a cluster of stocks, exposing yourself to all 100 top technology companies in which are listed on the New York Stock Exchange is going to help bring diversification and reduce risk in your international. If you are of that view and interested basically in FANG stocks, you should definitely think of this ETF. Correct. Now, some of first point that I wanted to tell you. The second point is you can invest in this ETF with as low as 1,000 rupees and in multiples of rupee 1 thereof. SIP, systematic investment plan option, is also available in this fund, and you can start with as low as 500 rupees a month. There is no entry and exit load. Right now, the third thing that you should know is the underlying fund in which this fund of fund, the European registered underlying fund, has an expense ratio of 0.30%. But that is not the expense ratio which is going to be charged to you. You will be charged at a higher rate. Why am I saying this? Why? Because add to the 0.30% expense ratio of the European registered ETF, there will be addition of the Indian fund. The expense ratio will therefore be on a higher side. So expense ratio of the European ETF plus expense ratio of the Indian fund of fund together is what you will have to bear when you registered in this fund. Now, peer funds, you ask, some peer funds like the DSP Global Innovation Fund or the Motilal Oswal Nasdaq 100 ETF have an expense ratio ranging from 0.5 to around 1.5%. So you know the range with in which the expense ratio can be charged to your investment, correct? The returns that you get from your investment are affected by the expense ratio that is charged on your fund, correct? So this is an important point that you should keep. The returns that the third point, the returns that the Europe registered ETF has generated over a period of time coincide, are similar to the Nasdaq 100 returns, correct? Now, in the last 10 years, Nasdaq 100 has given returns to nearly 25%. Now, these are pre-expense returns. So, these are gross returns that the Europe registered ETFs have generated, which are not bad if you look at some other, say a fixed investment return over a similar period of time, correct? The fourth point that you should if you are thinking of investing in these funds, now this is categorized as a high risk fund. Why? Because of the equity exposure. 90% of the investment will go in that underlying European ETF with 5% investments at the discretion of the fund managers will go into money market or other mutual fund or debt mutual funds of Invesco, correct? But that leverage is being given in this fund of fund. So basically, since the exposure is totally in equity markets, the risk profile of this fund is on a higher side. So if you are ready to invest over a long period of time, you should definitely think about this fund as a diversification in your portfolio. Correct. Now, the fifth and the most important point is, while deciding whether you want to invest in this fund, one thing that you should know is Invesco runs one of the largest ETFs in the US. What we are going to get into is a sister fund of that largest ETF. The returns at roughly 25% are exceedingly well over a period of 10 years. Correct? If you have a high risk taking appetite, if you want to diversify in international markets, take advantage of technology stocks, you should definitely think of putting in money in this fund. Correct? Again, look out for the expense ratio. Look out for the kind of returns that other peer funds, the ones I've already mentioned earlier, and the kind of returns that they have generated. Look out for that and then decide about your investment in this fund. But all in all, it looks as a good investment option. Please like, share my video and subscribe to my YouTube channel if you think I have added value to your investment journey, because that's what I aspire to do so with my videos. See you in my next video.